For joining the ACA Small Business Bootcamp and Resource Collective for this Wednesday, March 10th, for our special session today. I'm Robert Theobald, Small Business Ombudsman and Vice President of Small Business Services. We want to welcome you to our session. Those of you who are new, we first like to thank all of our community partners. We could not do these bootcamp sessions without these community partners. This is just a sample list of the 100 plus that we have helping with our boot camps. Their expertise, their time, their effort is invaluable, and we are grateful that they are sharing it with us. So the Small Business Bootcamp and Resource Collective is designed to help small businesses work through the COVID crisis. It is a statewide initiative supported by all of our community partners, and it is not only the bootcamp, but it is a resource collective. On the Small Business Bootcamp and Resource Collective website, you can find a lot of great information. We have our webinars on there, the current week's webinars. You can go on there to register. Most of you went to that website to register for today's session. Additionally, we have links for the Resource Collective. And then at the bottom of the page, we have our archive section. And the archive is a great resource because it includes all of our previous bootcamp sessions. We record all of our bootcamps and post them on there for review afterwards, or for those that can't make this time frame. And you can go back at any time and review the bootcamp session of your choice. There's over 125 boot camps that we have done and recorded and are listed in the archive. So it's a great library of knowledge. The Resource Collective link takes you to our Resource Collective page. And on that page, you can find the guides and tools provided by our community partners to help support small businesses. This is just a sample list of some of the guides and resources available on the Resource Collective. You can see there's things on unemployment insurance, safe retail, restaurant industry information, construction and manufacturing information. There's a ton of great items on there. And again, this is just a sample list. There's a lot more available on the Resource Collective. Another website that's very valuable is the Arizona Commerce Authority's COVID-19 Arizona Business Resource page. And on this page, you can find information on business guidance, financial resources. We keep those constantly updated when new information comes out. And there's many other things on there as well. So some of the programs that the ACA offers that help small businesses are small business services. And we can help you work with the SBA, work with the Small Business Development Centers or SBDCs. We can work with SCORE, which is another no-cost business counseling program. Connect with local banking contacts if you're looking for PPP or an SBA loan or a micro loan. We have a number of different lenders that we work closely with that can help provide those services. Our workforce division can help work with small businesses that are looking to hire new employees and or upskill their existing employees. And our manufacturing extension partnership can work with manufacturers to work through their COVID needs, work on lean manufacturing, help work with them really from A to Z in a manufacturing business. And they are a nationally recognized program, so we're great to have them as part of us. Additionally, the small business checklist is available to those folks that are looking to start a new business or start a side gig, or maybe enter into a new line of products and need to know what the licensing and registration and compliance needs are for that business. And that is, the checklist has that information for the local, state, and federal levels, along with links to the different agencies that you may need to work with. And finally, we want to mention the state's COVID-19 and information and resource page, ArizonaTogether.org. It is a great resource for everything related to COVID-19, not just business information. So now I want to jump into some quick updates. The SBA COVID-19 relief options website is definitely one that you may want to favorite and save, make handy. It has links to all the different SBA programs, including PPP, EIDL, shuttered venue, debt relief, and others. There's a lot of great information on that page. Additionally, as of March 7th, for the 2021 PPP loans, for Arizona has received over 30,000 loans from the PPP program in 2021 for over $2.2 billion. So that's a lot of loans and a lot of funds injected back into the Arizona economy to help Arizona small businesses. If you're still considering a PPP loan or have questions about it, the PPP FAQ is constantly updated with a lot of great information. And then again, if you're still looking, we have our PPP Arizona lender list provided by the district office, the SBA district office based in Phoenix. They sort through the different lenders that are participating in that program and created this list. So it's another great resource. So with that, I want to look at this week's sessions. Yesterday, we had a great session by Local First on how going green can financially help your business. A great session with some great little tips and tricks and hacks to save money in your business and be more efficient. So I encourage you, if you didn't attend it, to go back and watch it. There was some great information provided by Local First on that webinar. Today, we have a great session on the employee retention credit and how businesses can claim up to $19,000 per employee. So we're looking forward to it. And then tomorrow, we have a great session by Steve Feld of SCORE. The title is Key Business Takeaways from 2020, but the real important part of that is how those can help us succeed in 2021. And that's going to be the focus of his presentation on taking things from the past, learning from the past, and how we can how we can use them to help us succeed in the future. So it's going to be a really exciting, really good presentation. If you're not registered for it, I highly encourage you to register and attend that session as well tomorrow morning. So with that, we want to introduce Eric Stenson, CEO and partner at Stenson Tamadon. And they have been working with a lot of businesses on the employee retention credit. And so we worked with them to be on today's special session because the employee retention credit is a great program that is not talked about near as much as the other programs, but yet the funding that you can receive from it is tremendous. So with that, I'm going to go ahead and turn the time over to Eric and let him get started. Eric, is all yours.
Thank you so much, Robert. And I am going to go ahead and share my screen. And really, I wanted to thank you and Lisa and really everyone over at the Arizona Commerce Authority for helping put this presentation together today. So we're very excited to be able to share this information with small businesses across Arizona around the employee retention program and employee retention credits. When you and I first spoke, there was a request that we make sure that we keep this geared towards small businesses and not CPAs. So one of the things I wanted to promise the 100+ listeners that we have right now and people viewing this is that this presentation is really going to be useful to you as a small business owner. And this is not something that we're gearing towards CPAs. So we wanted, as one of the goals of this presentation, as a business owner, you to be able to understand what the employee retention credit is in plain English and not need a tax advisor or a CPA or a PhD to understand it. A second goal that we wanted is we wanted to talk about qualifications for employee retention credits. I have in the room here with me in this conference room my partner, John Steneker, as well as Aaron Tamadon. And, there's been a lot of thought leadership that the three of us have put in terms of qualification and really digesting what it is that the statute meant. And we want to break that down for everyone on what the guardrails are. And then the third thing, and this is the most important thing, is we wanted to directly talk to you as a small business owner about how to get that check. How do we actually, at the end of the day, put money in your pocket and make this real? So not just some tax credit that's floating out there that's in theory. So we're going to talk about how to get that check. In terms employee retention credits, there's a very broad base of industries that are entitled to claim employee retention credits. There's a great blog article on Paychecks, which is a payroll service provider. They said that it's their opinion that virtually every employer in America is eligible for them. On the IRS pubs, they say every employer in America, regardless of size, can claim them. We think there are a couple guardrails around them. We'll go through some of those. But one of the things that we would ask going into this presentation of everyone is that any preconceived notion that you have regarding whether or not you qualify for these, you set those aside for a couple minutes as we start to talk through this. So one of our clients is PhoenixHousePainting.com. We were able to recently file amended returns for them to get them $157,000 as a check that comes directly back, and that's just for 2020. Another client is a restaurant local here in Scottsdale, Jalapeno Inferno. This restaurant qualified for $285,000 in credits. They also had two sister restaurants, Rhythm and Wine and Market Street, which added about another $200,000 to the total just for 2020. So that's almost $500,000 to this restaurant just for 2020. And 2021 credits are about 3 times that. So this is really a significant amount of money that you as a business are able to bring in. I think many of our participants today are very familiar with the Paycheck Protection Program. The PPP was introduced in the CARES Act. Employee retention credits were also introduced in the CARES Act. The PPP had very specific uses that you had to use it for. So you had to use it to maintain payroll, pay rent, pay utilities. Employee retention credits do not have any guardrails on the use of proceeds. So this $285,000 that we're able to get Jalapeno Inferno, the business owner can do whatever she would like with it. So if she wants to pay down debt, make bonuses to employees, remodel, open a new location, do a shareholder distribution, use it as working capital. These are all perfectly acceptable uses of the funds. So there's no restrictions on use of proceeds. I think when we talk about tax credits, most people start by saying these things are just very confusing. They're a little bit scary. They're very inconvenient. They're difficult to apply. And there always seems to be this sort of gap between, yeah, I know about this tax credit, but what does that really mean? Am I really going to get a check? Am I flying money forward? Is this phantom money? There never just seems to be this easy button for tax credits. And one of the things that we really wanted to do as both a firm and also in partnership with the Arizona Commerce Authority here is get you that easy button so that you hit the easy button and the check comes to you. And how do we, as part of both the education here and we can talk about some services, how do we remove all of the obstacles as a business owner from you getting the check that you're entitled to under the employee retention program? So that's one of the core objectives that we have here. In terms of that easy button, I think that there's 3 things to know about these employee retention tax credits. One question that we commonly get from business owners is they say, well, is this something that I have to wait until the end of the year to take on my annual return, or I have a net operating loss? Does that mean I don't qualify? The answer is no. This is a check that goes directly to your business. This is not something that you take on your annual tax return. It's not something that you carry forward. This is one of those U.S. Treasury checks with the picture of the Statue of Liberty on there, made out directly to your business. It arrives in the mail. The process to claim the credits is relatively straightforward. There's no ambiguity on it. the IRS has given very clear and concise instructions to preparers on how to claim this credit. And qualification is very easy as well. And, you know, we often as a firm, again, get a lot of business owners that are worried about, you know, do I have to produce all sorts of documentation? And the answer is no. So you retain, you know, documentation to satisfy your own internal compliance, but there's not an arduous review like there is with PPP, where you're submitting financials and copies of driver's licenses and things like that. So this is much more straightforward, and the qualification process is very simple in terms of actually connecting your business with the check. Another question that we commonly receive from business owners is whether or not this is part of the PPP program. And employee retention credits are separate and distinct from the PPP program. So back in March of 2020, when the CARES Act passed, Congress introduced two different stimulus programs. One of them was PPP, which got a lot of market acceptance and market adoption through banks. The other one was employee retention credits, which at the time you had to choose between a PPP and an ERC. Now you're allowed to have both. So if you received a PPP loan, if you received a second draw PPP loan, you're still allowed to claim the ERC credits. You're still allowed to get a check for the money that you're entitled to. The one caveat to that is Congress, they said you can't use the same payroll wages for PPP forgiveness and ERC. And I'm going to talk a little bit about what that means, just so that people understand that at a very high level. And the last thing is, our recommendation is just to engage with there are firms that specialize in this. We're one of them. Synergy Partners is another one. You can also go to the Arizona Society of CPAs or talk to your own CPA to talk about how to claim them. That's the easiest way to do it. So how did we get here, right? So in the CARES Act, they passed these employee retention credits, and the whole purpose of it, according to the IRS and Congress and their intent, is it encourages businesses to keep employees on their payroll. And the ERC right now, as of right now, provides your business with up to $19,000 per employee. There is legislation that is pending right now that should pass today, this $1.9 trillion stimulus that everyone is talking about, which is going to provide up to $33,000 per employee. And if you break that down, basically 70% of the first $40,000 that you pay to your employee this year is going to be covered under employee retention credits. If you add the PPP for that, basically the government's paying 90% of your worker's wage for the first $40,000 that you pay to any employee. So how does this break up? So first, let's start with 2020, because the rules between 2020 and 2021 are a little bit different. So 2020, you're allowed to claim retroactively. So that means that you'll get a check today for payroll that you've already paid through 2020. And for 2020, your business is entitled to 50% of what you've paid each employee, capped at $5,000 per employee. So if you had an employee that made $10,000, you would get $5,000. If they made $50,000, you would get $5,000. All of that gets done by, it's on the, there's an amended payroll return that gets filed in order to get that check to you. For 2021, right now, Congress has authorized $7,000 per employee per quarter for quarters 1 and 2. So that's $7,000 in quarter 1, $7,000 in quarter 2, for a total of $14,000. The legislation that they're talking about today would add another $7,000 for quarter 3 and another $7,000 for quarter four to make that 28,000. Today, it's authorized for 14,000. So when you combine the 14 and the 5, that's $19,000. If you include the legislation they're about to pass today, that goes to 33,000. So it's a pretty significant amount of money. And if your business isn't thinking about doing this, you should be, because your competitors are, and you're going to be at a competitive disadvantage if they have a war chest of cash to survive COVID and you don't. As I said, this money, it comes to you in one of these checks. I think we've all probably seen these types of checks that started under, I just pulled a random image. It's not actually a Donald Trump stimulus payment. This is just a sample of what a treasury check looks like, and you would get it like that. One of the many reasons that we recommend working with professional firms to get this, aside from the fact that you're amending some tax returns, is there is some attribution work that needs to be done. So one of the examples I want to just kind of use here is a company with a $280,000 PPP loan. And let's just, for the sake of conversation, say that that loan was taking out on May 1st. So I've highlighted in red what would be the quote unquote covered period for that PPP loan. The ERC credits, you're able to take payroll starting on March 13th and going through December 31st. And so what we do as a firm, or what any CPA or tax credit specialist would do for you, is we would figure out of payroll that you're paying, what payroll is attributable towards employee retention credits, and what payroll would be internally allocated towards PPP forgiveness. And so you can see here in the month of May, we're saying from $112,000 of payroll, we're going to allocate $75,000 of that towards PPP loan forgiveness, and $37,500 of the payroll we're going to reserve for ERC credits. When our firm does this, we do it on a per employee per quarter basis. This is not any schedule that you submit anywhere. This is just your own internal business documentation to show that you're not double dipping on payroll, and that your payroll has been separated between the two programs. So that's very important because part of the statutory language says you can't use the same payroll for both, with a couple exceptions. So it's very important to know what payroll you're going to allocate towards PPP, what payroll you're going to allocate towards ERC. If you have not already filed for PPP loan forgiveness, we highly recommend removing from your payroll costs on loan forgiveness whatever wages go to ERC, or putting in a statement that you as a company are reserving all excess wages for ERC. If you've already filed for it, it's not a big deal. The rules weren't there when you filed. Let's talk a little bit about qualification, because I think that this is really the most confusing part to most business owners. One of the things that we commonly hear in the industry is people saying, I don't qualify because I didn't have a 50% drop in revenue. And we hear this over and over again. In fact, we even hear it from CPAs and tax professionals. And I want to start by addressing this head on. Your business does not need a 50% drop in revenue in order to be eligible for employee retention credits. In fact, your business could be making more money than it made last year, and you would still be eligible for the credit. So there is a way to qualify based on a drop of revenue, where if you had a 50% reduction, it's an automatic qualification. But that is not a necessity in order to qualify. So let's talk about what is necessary to qualify. So first of all, you need to employ people. And if you're just a sole proprietor or you don't have any employees, the program's not going to be helpful to you. So you need to employ people. You need to either be a for-profit or a non-for-profit business. So I think that this is really important. There are some governmental entities and different things like that can qualify under the new legislation. We like to work with for-profit and non-for-profit businesses. And this is really important because, you can be a 501c3, you can be a church, you can be, a law firm. All of those are fine. I mean, we have nonprofits that, operated community centers and they shut down their gym, and totally fine to qualify. So you don't need to have, income taxes. The third thing, and it's really important, is that you paid W-2 wages. We've talked to some businesses and they're like, yeah, I have 10 employees, but one is just an independent contractor paid on 1099. That doesn't work. And if your business has 1099 employees, I know Aaron and I here have had contractors work for us at Stenson Tamanon. We have made a point of making sure that we've converted those employees to W-2 so that we could get the employee retention credits on their wages. So if you do have a mix of employees being paid both 1099 and W-2, make sure that you're thinking proactively and you're telling those 1099 people, hey, sorry, but we need to actually convert you to an employee, and you're going to have withholdings against what we pay you. And then the last thing that's really important is that you've had some sort of impact, and it can be direct or indirect. I'm going to talk about what that means in a second, due to a governmental order related to COVID. And this is what's key, and it's also what's most confusing to people, because one of the things that's just I think amazed everyone in the room where I am, and is how resilient and adaptive businesses have been to COVID, and they've been impacted, and they don't even realize how they've been impacted because they've done just such a remarkable job in terms of adapting and responding to the COVID crisis. And so we're going to talk about what impact looks like. The words that the IRS uses is called partial suspension of operations. I think that's a term that confuses a lot of people. So we're gonna break that down a little bit on what that actually means. And I think that we find that a lot of businesses have been impacted. One of the things I do want to say up front, and I'm going to give an example of an insurance agency. Every business is different. We had an insurance agency, a prospect that we talked to, and they said, well, all that we did was we went into the office, we picked up our computer monitors, we picked up our VoIP phones, and we went home. Do we qualify for ERC credits? And we said, no, I'm sorry, you don't, because it has to be non-nominal. We had another insurance agency that said, hey, we closed down our office and had everyone work from home, but it was it interrupted our business. We had to buy people laptops. You couldn't get laptops because every school child in the United States was trying to get a laptop, and every business wanted a laptop, and we had to set up VPNs for people. So with regard to impact, we're looking for something that's non-nominal, and let me not scare people away with that, because I'm going to actually talk about what that means. So when evaluating whether or not you qualify, let's start with what the law says, and then let's break it down a little bit more. So it says fully or partially suspends an operation during any calendar quarter in 2020 due to a order from a governmental authority limiting commerce, travel, or group meetings from COVID-19. So I think the first thing that we hear is people say, well, I'm an essential business and I never fully or partially suspended operations. And I think that that's one of the biggest myths out there that we see. And certainly taking that position is going to put you at a competitive disadvantage and have you miss out on a lot of money that you're entitled to. So one of the things that we like to look at, for example, is think about how much you traveled and the different trade shows and ways that you interacted with your customers in 2019 versus 2020. So in 2019, you were probably going on site and having face-to-face meetings In 2020, you were probably doing Zoom. In 2019, you may have been going to trade shows, industry events, other items like that. So a partial suspension of operations doesn't have to be, I shut my doors down. Within the framework of that is changes to ways that you do business. So you've suspended your in-person sales. You've suspended your having your employees come into the office. As long as you are under 100 employees on a full-time basis, all of your employees can continue to work for you and can continue to get paid, and that still counts as a partial suspension. One of the other things that we find is people say, well, I was a essential business, so I was never partially suspended. When the IRS issued 120 pages of rules, one of the key rules that they have is that key supplier or customer impact qualifies as a partial suspension of operations. And so let's take the example of kind of like the painting contractor. To the extent that they had, commercial jobs where their customer was a non-essential business and shut down, that qualifies. To the extent that the restaurant had limitations on the seating capacity, that's considered a partial suspension of operations. If hours were reduced. And what's key here, and why we always say to work with a professional firm, is we've probably seen your industry before and have talked to 10 or 20 or 50 businesses just like yours, and understand how to draw the line between the governmental orders and the impact that it had on your business. And let me explain what I mean by that. So the statutory language says that the governmental order has to limit commerce or travel. Well, the government never shut down airlines, right? The airlines were always running all through COVID. So let's say you're a musician and you used to travel all the time, and now you don't. That's not because of the governmental order on the airline. It's actually because the governmental order on the venues. The venues themselves were shut down. So that's your key supplier that was impacted, right? And so that is what limited commerce and travel. Again, it doesn't have to be that drastic. In terms of the operational impact, the test that the IRS came up with is they said that the partial suspension should be in an area of your business that's at least 10%. So again, it doesn't have to be 10% of your business, but let's use the restaurant as an example. The dining room of a restaurant represents more than 10% of their business. So even if it didn't have a 10% impact, the fact that that portion of the business was impacted is what qualifies them. So there's a important distinction there. It gets very, very, very nuanced. Other things that we see are warehouse and distribution impacts, supply chain impacts. A lot of ports were closed and, travel was restricted. So we've seen things with engineering firms where they were no longer able to travel over to China in order to talk to their manufacturers. We've seen things where there were interruptions in supply chain and people couldn't get key supplies that were needed. So we've seen a lot of builders and, construction people where they literally couldn't get lumber. We've seen commercial builders and contractors where the meetings with the project teams went from in-person to virtual, and now it extended out the timelines in order to build a building, or the city hall was not issuing permits or holding hearings on zoning so that they weren't able to continue with all the projects that they had in the pipeline. And again, because the zoning hearings were shut down, that in turn affected the commercial builder, or the builder that was going to impact, that was going to hire the painter. And that's how you start to draw these proximate lines between impact from governmental orders and your operations. And again, it doesn't matter if you adapt it. And let me give you a great example of that. We have a client that's a nonprofit, and this nonprofit had a gymnasium and an after-school program for children. And as a result of COVID, government shutdown orders, they had to close their gym and they had to close the after-school program, but the nonprofit pivoted and they started using their gym internally to stage meals for the community. And when they look at their financials as a nonprofit, they actually had more revenue, more money coming in from programs after COVID hit and they started doing the meal distribution than they did previously from having the gym and the after-school program, and they employed more people. And that's perfectly okay, right? Because they're still allowed to claim these credits because a core piece of their business was shut down. We have another client that has a farm, and attached to this farm was a retail store. And they closed down the retail store and they stopped doing tractor rides for kids, but they took those same employees and they repurposed them elsewhere in the business. Everyone continued to get paid. Their revenue from their farming operations was uninterrupted. Again, they still qualify because they've closed down that one portion of the business, the little retail store that they had on their farm. So we really like to say, go one or two levels deep to think about, how it really was that you were impacted. Also, think about what the long-term impact is. One of our customers is a software group, and they sell into the medical industry for medical software. One of the things that they weren't able to do this year is go to the trade shows for GE Centricity and HIMSS and all of these things where there's going to be a lagging revenue impact on that. So not being able to go to those, travel to those group meetings, travel to those trade shows is going to impact them in a year or two out based on their sales cycle. So to be able to bring, tens of thousands of dollars to them or hundreds of thousands of dollars this year to build up on that war chest is going to be really important, particularly as businesses think about their sales operations and how they are going to retool. Zoom is wonderful, but there's nothing like in-person meetings. So really think about how that's impacted your business. A few common mistakes that we see in the industry that I want to kind of talk through, and some of this gets a little bit technical, so I'm not going to get too much into it. But one of them is just in terms of qualification, underestimating your qualification. We see very broad-based guardrails around who qualifies for them, and we know that Congress wants to pump money into the economy through these stimulus programs. The IRS does require you just internally to maintain documentation. We use with our clients just a questionnaire that we keep in a case management system. It's a very simple questionnaire that just goes through some basic checklist items to have satisfactory documentation around the ERC qualification. The IRS, as I said, they gave really good guidance to tax professionals. One of the things that we see sometimes people do is they say, well, I already have a relationship with my CPA. I'm just going to go to my CPA that I work with today and have him or her do this for me. There's hundreds of pages of rules. You should really work with a firm that specializes in this. CPAs are great on the annual returns. One of the things that I like to point out, for example, is when you actually read the IRS instructions, they say, hey, if you're claiming credits for Q1 of 2020, all that money, just put it on the Q2 return. And if your CPA is not doing this on a day in, day out basis across hundreds and hundreds of clients, they're going to miss important rules like that. They're going to see things like on the 941, there's a box that says explanation, right? And we've seen a lot of CPAs just write, I'm filing this to claim the employee retention credits, which is actually wrong. In the IRS rules, they want you to give them the mathematics in the explanation box. And so working with a firm that does this and knows what they're doing is really highly recommended. Most reputable firms, us included, we work hand in hand with your CPA, and they will put their P10 information on the return itself to identify themselves to the IRS. We know there are some ghost preparers out there that will prepare these docs for you, but certainly we stand behind our work, and most of the reputable firms out there will, you will see it in the pay preparer section. You will see their information. So don't work with someone that's not going to put their name on it. Another common mistake that we see is forgetting to back out payroll that's used in other places. So for example, when we work with a client, we ask a couple questions about their PPP loan so that we can figure out what payroll goes towards PPP and what payroll is attributable to employee retention credits. Let's talk about this one here. So one of the things that I didn't mention, because I think it gets super confusing, is this money is what's known as a fully refundable tax credit against the employer share Social Security. Now that's a lot of really big words there. So let's break down what that actually means. So when you run payroll as an employer, you pay into Social Security. And your payroll company, you're probably using ADP or Paycheck or QuickBooks Full Service Payroll or Gusto or one of those. They're taking money from your bank account and they're sending it up to the IRS. And part of the money that they're taking is your portion of the Social Security tax. So the money that you get back is that money, so whatever you're paying, it's a fully refundable credit. So that means if you've only paid $100 of Social Security tax and you're entitled to $250,000, what fully refundable means is you get the full check for the $250,000. So it's not at all limited to the amount of tax that you're paying. So it has no relevance on the amount of tax that you've paid. You get the full amount. And one of the common mistakes that we see two common mistakes is one, people will forget that there's what's known as a refundable and non-refundable portion, or they'll just limit it to the amount of tax that they've paid. So you certainly don't want to limit it to the amount of tax that you've paid. Make sure to claim everything that you're entitled to. And then that last thing, as I said, is make sure that you're providing the math of how you get there. We see a lot of kind of what I call these common objections or misconceptions where people say, look, I got a PPP loan, I'm not entitled to this, or they say, I don't want more money from the government. We actually had a manufacturer tell us that. They said, oh, our business owner doesn't want any more government money. Probably the worst place for the money is to leave it with the IRS. I mean, there's so many better uses, whether you want it as working capital, whether you want to hire new employees, pay down debt, expand. Give it to your employees as bonuses before leaving it with the IRS. Create a scholarship fund. Do something good with it, but certainly if you're entitled to it, don't just let that money sit there. Also, don't. I think a lot of people get really hung up on the revenue test. The statutory language is very clear. The IRS is very clear. It's an or. You either have 50% decline in revenue, or you have a interruption to operations. So we see a lot of people get confused on that. We also see a lot of people get confused and think, oh, you know what? I don't have to worry about this. My CPA, he does my taxes for me. All is well, right? He's going to claim these credits, and I just, as a business owner, don't have to think about it. That's dead wrong. Your CPA is doing your annual tax return. This is all related to payroll tax, so your CPA really is probably not even going to be on their radar. Again, thinking that you're an essential business so that you don't qualify and just saying, well, I never had a partial suspension of operations. You've really got to dig deep into what those rules mean by it, and really try to validate and document qualification. Don't just say, oh, it's an acid test and I fail. That's a really big mistake. Again, as long as your headcount is under 100 employees on a full-time basis, your employees can continue to work for you. They can continue to get paid, and you're still allowed to claim the ERC credits under partial suspension. We hear a lot of businesses say, well, I never had my staff stop working, so we don't qualify for this. Only if you're above 100 employees for 2020, or for 2021, it actually goes up to 500 employees. Do your workers need to not be providing services to you and getting paid? So, making sure that you're not, imposing restrictions on yourself that don't actually exist. Again, thinking that your business operations weren't suspended, I want to talk about this, just again a little bit more. The IRS did say, look, stay-at-home orders don't count, because obviously every single business in the United States is subject to a stay-at-home order. But government shutdown orders do count, right? So think about the ways that your businesses were operating in a B2B fashion or even a B2C fashion, where shutdown orders were impacting your customers, your suppliers, your partners, people contributing to partners contributing to work that you're doing, and how all of that has impacted everything. And then, of course, one of the last things that we hear is people say, well, I lost money this year, so I'm not paying taxes, so I can't get any money. Again, that's just a complete misconception. This goes against the payroll, not against your annual return. Even if you've lost money during 2020, even if you're going to lose money during 2021, you're still eligible for the check. In terms of claiming it, so you amend what's known as a 941. It's a pretty scary looking form. This is why we say it's best just to work with a professional. Firms like mine, there's, again, Synergy Partners as a competitor. You could go out to the Arizona Society of CPAs. People that do this work on a day in, day out, we don't worry about these forms. We know exactly how to fill them out. We know exactly how to get the claim. You really don't need to worry about them. If you have in-house a very, like if you're kind of a larger entity and you do payroll in-house and your controller or CFO is used to filling out 941s and you're filing these on your own today, you would be able to claim the credits without any problem. But absent that, it's best, just to hit the easy button, right? Find a firm, whether it's us or someone else, and just hit that easy button and say, hey, I'm here, here's access to my payroll. Please go ahead and get me this stimulus money. So I kind of concluding thoughts before I open it up to everyone for kind of 10 minutes of Q&A. Again, just avoiding your mind trying to figure out if you qualify or don't qualify. We've seen just about every type of business and every type of sector qualify. There are exceptions. I mean, we've seen things like trucking companies where they just don't qualify. But usually, like we've talked to law firms, they've had interruptions to court calendars, to depositions, to being able to work with each other. All sorts of industries have issues. Certainly, in terms of the credits, we use software that we built in-house to figure out wage attribution and credits. We've seen that result in tens of thousands of dollars of additional money going to businesses where CPAs have tried to do it sort of back of envelope math and figure it out, and you could leave tens of thousands of dollars on the table like that. And so really just you should work with a firm that does it. For those that are interested in working with us, our website is stentam, STENTAM.com. My email is real simple. It's Eric, ERIC, @stentam.com. You can also email John, JOHN, @stentam.com. We'd be happy to have one-on-one conversations and help you get this money. There's also the Arizona Society of CPAs. They have a great list of CPAs in Arizona that would be able to provide assistance to you. So that certainly you could go there for a referral as well. With that, I will open it up. I know we've had in the chat box probably some questions. So I'll see if we can answer some of these. And I don't know if there's a way to do like a raise hand or if anyone wants to ask any questions.
So Eric, we have the questions in the Q&A box. If you click on the Q&A box, you'll see the list of questions there. or I can read them off as well, whichever you prefer.
Yeah, So let's go through these. Let me answer some of these. So first one from Brad. We're an LLC that's taxed as an S corp. I pay myself and one employee W-2 wages. So this is actually a really great question, and thank you, Brad, for asking it. So for 2020, anyone that owns more than 50% of the business, owners are disqualified from claiming ERC credits. Certainly, your employee, we would be able to claim for them. So in terms of counting employees, it would be the person that you employ, not you, for 2020. They did change the rules for 2021, but for 2020, anyone that owns more than 50% would be disqualified. From an anonymous, the Paycheck's blog, I will post that, or if you want to email me, eric@stentm.com, I can send that back. I believe it was with Paychecks. I can send it to you. They had a great blog, an article about employee retention credits. So from Lisa, how do we calculate the ERC during the months PPP was used? I saw your example, wasn't sure how you came up with that. So Lisa, thank you so much for that question. That's a wonderful question. What we've done as a firm is we actually built software that does this. So it's a pretty complex calculation, and it's where firms like ours are able to add some value. So what we're able to do is first take wages from March 13th through the start of your covered period, and then the end of the covered period through December 31st. And then what our software does is it moves for each employee $1 at a time into the ERC bucket to make sure that we're not violating the rules of PPP forgiveness. And it'll keep moving $1 at a time until either the employee gets to $10,000 of wages or PPP is not fully forgiven. And I think that gets to kind of one of the points that I was making of if you try to do it yourself, you're probably going to leave tens of thousands of dollars on the table because there is a lot of complex math around the intersection of ERC and PPP. And so certainly my recommendation would be to work with a firm that's specializing in it and just not even worry about that calculation as the business, just leave that to the accounting services group. From Tina, I have a nonprofit with no employees. I pay myself as an independent contractor. Can I claim the money? I paid myself as a non-W-2 in 2020. So Tina, I'm so sorry, but only W-2 wages count towards it. And I think this is also a really good point, though. And thank you so much for asking this, because I think it highlights something that's really important, which is if you do have employees that you're paying right now on a 1099 basis, just sign up with Gusto, sign up with Paycheck, sign up with ADP. It doesn't matter which payroll provider you use, and just move them to W-2 too, because there's a lot of programs, PPP, this and other things, where it all revolves around W-2 wages, and unfortunately, on independent contractor wages are not don't count towards it. So you can't do anything about the past, but you certainly can, going forward for 2021, make that change. Scott wants to know what we charge for the service of helping apply for ERC funds. Thank you so much, Scott. So market rate, we're on the lower end of market. We're a contingency-based firm, so we're 10% of credits delivered. We have a competitor, Synergy Partners, that's 12 to 15% of credits delivered. So we do it purely on a percentage basis. We do know that some of the larger accounting firms will do it on a time and materials basis. Usually those are larger clients and bigger contracts. But certainly if you want to email John, JOHN, @stentm.com, he would be happy to send an engagement letter, and we could talk through pricing. Carrie says, did I hear something about a maximum number of employees in order to qualify? I may have misunderstood. Great question, Carrie. So there's technically no limit on the number of employees in order to qualify. There is a pivot point if you have above 100 full-time employees or below 100 full-time employees on a full-time basis, right? So you could have 200 employees working half-time. And the pivot point is, if you're over 100 full-time employees, you only get credit when the employee's working and not providing services. So true small businesses under 100 employees, your employees can continue to work, you can continue to pay them, and you can still get credit. So the program's available to everyone, but the pivot point is what wages qualify. Aaron, cost range, again, we work on a contingency basis. 13 employees is great. I mean, it's hundreds of thousands of dollars that we should be able to get you. And again, I would just email John, JOHN, at stentam.com, or Eric, ERIC, at stentam.com, and we could talk to you. So payroll companies tend to have documentation that calculates PPP. Do they have ERC calculations too? This is a great question, Andy. Thank you so much for asking that. So we've looked, we haven't seen it. We do know that the payroll companies, and I want to give a simple answer to this. We've talked to ADP in the past, and the general answer that we got from that was sort of it depends. They said, and again, I don't know if this rep from ADP was right or wrong, but what she said was that they would have to void every payroll that they've done and then re-enter the payrolls with ERC that you tell them to do. So they wouldn't provide the calculation. You would have to provide that calculation, and then they would have to reissue every paycheck. It seemed like a really complex process. I mean, basically the answer that we got was the payroll company didn't want to do it. But I would just recommend talking to your individual account manager in regard to what services they might have available. So Fritzy, we have a control group with an employee leased by one company that's billed out to the other two companies. With the other companies that had issues. So this is a wonderful question. Fritzy, thank you so much for asking this. So the IRS has what are called aggregation rules. And what it means is basically for the point of the 100 employee cap, all the affiliates you have to consider as one entity. And if any one of those entities has any sort of partial suspension or qualifies, then all of them qualify. So certainly, if any entity within that group qualifies, Fritzy, all of them, as long as you're following the aggregation rules, all of them do qualify. On a related note, for those that are working with PEOs, you are entitled to these credits. The PEO has to claim them for you. From Anonymous, does it cost to validate eligibility? We're happy to send an intake questionnaire if anyone has questions. Just send an email to eric@stentam.com or john@stentam.com, and we're happy to look at your responses to that and talk through your eligibility. We work purely on a contingency basis, so even if you were to sign an engagement letter with us, if we read your responses to that questionnaire, and we've had a few of these where we've said, look, I'm sorry, it doesn't fit, it's not a big deal. Instructions refer to second quarter 2021 filings. Can you show us now anticipating 2021 Q2 payroll? So this is a question from David Volk. David, thank you for this question. This is a great question. So there's two ways to claim.
So I think we're right to stop here. Thank you.
Lisa, let's have them answer that last question real quick.
Okay.
And then we'll wrap up with that.
Okay, sounds good.
Yeah. So for 2020, you're filing amended returns to claim what you've already earned. For 2021, you can use what's known as a Form 7200 to get an advance payment for quarter two if you want. We don't recommend doing that, but then again, you would just true up your return. So again, if you, for anyone that I didn't get to answer their question, I know the list is really long here. I don't know if I can answer these after the fact by typing it, or again, you can just email those questions to eric@stentam.com, And I'm happy to answer your questions and have a follow-on conversation with you. So thank you.
Excellent. Thank you, Eric. We appreciate all that information about the employee retention credit. Great questions from the participants. Thank you for sharing those questions with us. Again, if you have additional questions, you can email Eric at eric@stentem.com. With that, we are a little bit over time, so we're going to go ahead and wrap up. We want to invite everybody to join us tomorrow for our Thursday morning boot camp session and learn some things that happened in 2020 that can help you be successful in 2021. Really looking forward to that session. And again, the recording of this session will be posted on our website later today. So you can go back and review it if you want, and we will also post the slide deck with that. So thank you all for being with us today. Thank you, Eric, for your presentation, and we look forward to seeing everybody tomorrow. Have a great day.
Thank you.